Good morning, everybody, and thank you so much for joining our workshop today. Happy New Stimulus, Unpacking the New Federal Aid Programs for Business. We're really thrilled to have Robert Killen from the SBDC with us today, and I'll introduce him shortly. I just have a few intro slides. Hopefully they won't take too long. My name's Ariel Rubin. I am the Lane County Venture Catalyst for Oregon Rain, and I also own my own marketing firm, as well as participate in the family business Hummingbird Wholesale, if you've heard of us in Eugene. Today's agenda, we're just going to do some short introductions right now. Hopefully by 9:05 we'll be able to get Robert going for the main meat of the workshop. We're going to end 5 minutes till the hour for more Q&A, although we will be able to continue past the hour if there's a lot of questions that we can't answer during the hour. Just a reminder, some virtual etiquette, please remain muted throughout this session. There's so many of us, there's a lot of background noise if we're all off mute. And if you have any questions, please post them in the chat or use the raise hand feature. We'll call on you to unmute and then you can ask your question. And of course, just a reminder, this is a place for fun, learning, and inclusivity. Please be supportive and polite. This is a safe space for all to learn. And a reminder, this event is being recorded and we will post it on Facebook and YouTube after the fact. So folks that want to review or pass along to others, you can do so. Oregon Rain, our mission is to partner with communities to catalyze entrepreneurial ecosystems, connect entrepreneurs to resources, including overlooked entrepreneurs, and contribute to the creation of prosperous economies. And we do this, we like to say that we're building on infrastructure for startups. And that includes catalyzing mentors, networking opportunities, workshops like this one, physical assets, making sure there's incubator kitchens available, etc. Activating capital, news and media, local government support, and of course, workforce. And we know that we can't do this alone. So we do this by catalyzing community, of course, building strong partnerships. So please join in. We're always stronger together. Please share your ideas with us. Especially now, it's important to stay connected and all are welcome. And that brings us to a huge thank you to our partners, mentors, and entrepreneurs and funders. We love creating thriving entrepreneurial ecosystems with all of you. This is our Oregon Rain team. We're really excited to welcome a few new folks, Ann Whittington and Laura Ferguson, to our team, as well as the rest of us. You've been with us for a while, you know the rest of us. We're all here to serve you across Oregon in various counties, Linn and Benton counties, Lane County, Grant County, and beyond. Now, of course, across the coast with Laura as our Blue Economy Coastal Catalyst. So please join us. We're always here to support you. Please reach out. What's next is our motto. We're always excited about continuing great offerings for all of you. So you can check out our website at oregonrain.org/events to see what's coming up. We actually have a workshop right after this one at 10 o'clock. It's one of a 5-part series. There's 2 series left, The Road to Financial Resiliency. So right after this at 10, Raj, if you want to put that link in the chat so y'all can register. And there's also another event on January 20th, 10 a.m. as well. And we're working on putting together a Moneymaker Accelerator program, which will be a 10 to 12-week program, March through May, all focused on growing financial literacy. So please keep an eye open for that. And we always have weekly mentorship opportunities available. So check out our website for more details. With that, I'd like to welcome Robert Killen, the director of the Lane SBDC. And speaking of partners, Robert, you are a phenomenal partner, and we really appreciate all you do for the entrepreneurs across Oregon. So here's to Robert.
You, Ariel.
Virtual round of applause. I'm going to stop sharing my screen, and you're welcome to start.
All right. So let me get over here to share my screen. And you looking at my first slide, unpacking the new federal aid programs for business? Perfect. All right, well, thank you, Ariel, and it's great to see you all here. Obviously, this is a topic of extraordinary interest, and it should be. This new aid package, which is affectionately known as the, something in Klingon. I don't know how they went from CARES Act to Klingon, but it doesn't really matter because what they did is largely exceptional. They did a lot of good for businesses specifically in this new package. And I'm actually going to spoil this presentation by giving you my 3 takeaways here at the beginning. I know as a presenter, no matter how much I say and how well I say it, you're only going to take away 2 or 3 things. These are the 2 or 3 things that are probably most important to you. And you don't need to look at this because I am going to be sharing this slide at the very end as well, so you can absorb it a little bit more. But basically, the second draw portion of the PPP loan, the targeted EIDL advance, and the employee retention tax credits are all extraordinary opportunities for businesses. And in this presentation, of course, I'll be telling you why I think that's the case. Before I jump in, a little bit about the SBDC. Small Business Development Centers have been in Oregon since 1983, so we're entering our 38th year. There are 19 centers like mine around the state. We are all attached to community colleges and a couple universities. I'm very proud that Lane was actually the founding SBDC center for Oregon, and we are known for free and confidential advising, which we have always provided, courses to help you strengthen your skills as an owner, and we have a brand new micro enterprise training course that starts next week, and as well as our small business management program, which is a 3-year cohort model for existing and established businesses. Very proud of both of those programs. The SBM, or Small Business Management Program, we have seen the likes of Euphoria Chocolate and even Mentor Probes. Both of those organizations were in our very first class back in 1983. Mentor Probes is now Thermo Fisher Scientific, so pretty well established businesses. And then we also have specialized services. These include teams that do very focused work, and 3 of them are our capital access team, which provides specific advising and support to help you access funding as you need it. And we have a market research team out of Southern Oregon University. And we also have a global trade program out of Portland that can help you if you want to go global. So I'm very proud of the program that I'm a part of across the state. We have, as I said, those 19 centers. If you're not in Lane County, there is an SBDC center that serves you directly. To find them, our statewide link is OregonSBDC.com. Within Lane County, you can find out more about my programs at lanesbdc.com, or you can just email me directly. That works too. So with that, let's dive in. So our agenda today, going to be talking about the PPP, 3 different aspects of that: impact on existing loan holders, the second draw opportunity, and first draws, what that all means with the new package. The EIDL Advance, which is a kind of unreal opportunity. And then the employee retention tax credit, which largely got ignored the first time around, but it's definitely worth considering this time due to changes. And then briefly, just a very niche program is this grants for shuttered venue operators, which most people haven't heard about, but if you happen to fit, it's a huge opportunity. So we're going to start with the PPP, the Paycheck Protection Program. It's a $284 billion program. It is good to know that they have set aside, say, 20 billion or so for specific populations, specific communities, underserved populations, which is a good sign. But the full program is fairly robust. The Fed thinks that we won't go through this money. I'm not certain that that's the case. I think that it is so easy to get second rounds that they might see more activity than they're expecting, but they expect to have money to carry through the program. So existing impact on existing PPP loan holders. One of the first big changes, and this was a huge concern, is that the way the law was written the first time, the rules were written the first time, the IRS insisted that if you had PPP, you had a Paycheck Protection Program loan, and you use that money on what would normally be deductible expenses, which is just anything you would pay for, and then the loan was forgiven, that you couldn't deduct those expenses and you'd have to pay taxes on them, on that amount of money. And no matter how much the Congress said, no, that's not what we intended, the IRS said that's the way it's written and we're sticking with it. Thankfully, the Congress, when they passed the new stimulus package, was very explicit that they expect the forgiven amounts to still be fully deductible if used on deductible expenses. So that's a huge benefit to those who currently have the loan. There are new qualifying expenses, which include business software, worker protection expenses related to COVID, any like putting up plexiglass, all of that. And then it was a bit of a surprise to me, but property damage related to public disturbances during 2020. So if you have a business and you experience damage as a result of riots, and we have some of those in Eugene, you can actually use a PPP loan to help yourself. And then the EIDL treatment for forgiveness. So this was another, it was a real annoyance for me. So imagine you had a $50,000 PPP loan and you received $10,000 in a forgiven EIDL advance. If you got that full 50,000 of the PPP loan forgiven, so it's essentially a grant, that $10,000 EIDL advance, which was also a grant, was subtracted from that forgiven amount, and you'd end up with a loan, which was really frustrating because I don't think anybody thought through that process. Well, they have eliminated that. So now they do not subtract the EIDL advance from the forgiven amount of your PPP, so you don't have to worry about having that unexpected loan at the end. So that's, again, a great change to this program. And then, and I should say, I have heard from a reputable source, although I haven't found the source of their information, that if you went through the forgiveness process, you are able to reapply for forgiveness and have that EIDL amount forgiven. But you're going to have to reach out to me so that I can point you to the direct information about that, because I haven't seen that specifically. And then for any PPP loans up to $150, they're creating a new forgiveness application that's supposed to be significantly simplified. So wait until that comes out. It's scheduled to come out on the 27th of this month. So hopefully we'll see an easier way to get forgiveness for the smaller PPP loans. All right, on the second draw loans, and I think this is a huge opportunity, especially at that $150,000 loan size and smaller. To be eligible for it, you have to have exhausted your first loan. You have to have spent it out or certify that you will spend it out before you receive funds from a second. That's a requirement. You have to have 300 or fewer employees, which typically nobody has a problem with. And then this is the revenue reduction requirement, which is probably the most complicated thing here. You simply have to show a 25% reduction in revenue in your choice of quarter, 2020 over 2019. So imagine you had $100,000 in revenue in 2019 in Q3, and in Q4, you had $75,000 or less, you would qualify. Now, if you are a Schedule C, a lot of sole proprietors, they don't go through the process of creating formal financial statements, and that would be difficult for them. So they've also allowed for Schedule Cs if you saw a 25% reduction year over year, total year, 2020 compared to 2019, you can simply submit your Schedule C, that Schedule Cs for those 2 years that reflect that reduction, and that would qualify. So you don't have to create a new report just to apply for forgiveness. The loan amount is exactly the same for most businesses, which is 2.5 times your average monthly payroll. I know some people struggle with how to calculate that. If you actually have payroll records, it's fairly simple. You just add it all up and figure out what your average is, and then multiply that by 2.5. And they said on the prior year, or the year prior to getting the loan, which if you get a new loan would be last year, but they also say you can just use 2019. So you can use the same numbers as 2019, which is what most people are going to do. For those of you who are sole proprietors, to figure out your average monthly payroll, you take the net income at the bottom of your Schedule C. So your total annual income for 2019, divide that by 12, and that's going to be your monthly annual, your annual monthly income. And there are some nuances for S corps and things like that, but that's the basics. Now, for food service businesses, any business that has a NAICS code that starts with 72, and this includes obviously restaurants, but also hotels, casinos, I believe casinos, caterers. They've actually created a bump for you, a 40% increase in the amount of loan that you can get. So you take your monthly average payroll and multiply it by 3.5, and that is your maximum potential loan amount. So a boost for those industries that were hit so hard. The maximum loan amount for the new program is $2 million. And then forgiveness, some changes to this process. When the first program came out, you had to use all the money within an 8-week period. And that just didn't actually work. So they came out with a revision and you had 24 weeks to use it. So, and then you could choose either an 8-week covered period or a 24-week covered period. The reason I say flex here is that now you can choose anywhere between 8 and 24 weeks. Basically, on the day you receive funds, the day they're dispersed to you, that starts the clock. And you can choose any date from 8 weeks out to 24 weeks out. My recommendation is to use the longest amount possible, because that's going to make the calculations for full forgiveness easiest. So that's my recommendation. The forgiveness amount is capped at the lesser of your total eligible expenses, or 60% of payroll in the covered period. This is a little complicated. I'm not going to go deeply into it, but just let me say that the 60% of payroll in covered period is normally what's going to cap people's forgiveness. The longer you wait for your covered period, the longer amount of time you call your covered period, the more payroll that's going to be used in that calculation. So it's going to increase your number. So that's why I'm saying use the longest number. I apologize, that's a little confusing, but that's my recommendation. And then remember, a new forgiveness application is coming, which should make all of this much simpler for loan amounts at 150,000 or less. So watch for that. Now, for first draw loans, these are people who did not get the PPP the first time around. They didn't trust it, just didn't know what to do, whatever it was. For first draws, they've added some things. I know we've got some chambers represented here. The chambers were not included in the last year. Chambers have been added. So 501c6 organizations that aren't largely doing strong legislative work can apply for this. Local news organizations, housing cooperatives. So they've added some entities. They've eliminated publicly traded companies. And now, for some reason in the first round, group insurance wasn't included. So you couldn't include the employer's cost of group insurance in the payroll calculations to determine maximum loan size. Well, that didn't make any sense the first time around. They changed it this time around, so now it is included. So all good. And here's where we're at. So just a quick reminder of the process. For the PPP, the Paycheck Protection Program, you as a client, as a business, apply with your lender. And most financial institutions are going to have their own portal. They're going to have their own process for getting an application to them. And many of them are going to be online. Once you complete that, you submit it to your lender, and your lender goes through the process of underwriting that application and hopefully approving it. Once it's approved, the lender submits a package through the SBA portal, which you've heard opened up on Monday, and we're going to talk a little bit more about that. Then the SBA signs off on it. Once the SBA signs off, then the lender can distribute funds to you. That's the process. So the reason that's important to note is because we all heard the SBA portal opened on Monday, but it only opened to community financial institutions. And those are made up of micro lenders, minority deposit institutions, community development corporations, and community development financial institutions, or CDFIs, who have um, applied to the SBA to be a PPP participant. So they have to go through that process and apply. Um, Here's where the SBA, in my opinion, they messed up again. Um, I'm really happy with what all of this program looks like, but they opened up the portal on Monday to these types of institutions. But looking back on this, so we're at the middle of this process. They made it so that those specific lenders could submit application packages to the SBA, but they didn't actually present their rules and their sample application until after the close of business on Friday. So how many applications were actually ready to submit on Monday from these institutions? I think very few. It concerns me. I do think that we'll probably see a little extra time before they open up the portal to all other financial institutions. The reason they even did this is because they wanted to prioritize populations that are served by these types of organizations, women-owned businesses, minority, veteran-owned, rural. They wanted to prioritize them. But then again, I think they sort of messed up in the process. So I think they're going to have to give them a little bit more time, but we're just going to have to wait and see.
Hey, Robert, there's
Um,
a ton of
yes,
questions coming through. Should we just knock out a few right now? Do you mind?
sure. If you want, that's fine.
Okay, just so there are not so many at the end. So someone is asking, how can I see if my Depot Bay, Lincoln County area is deemed low income community? What resources does the SBA use to qualify businesses for low income
Yeah.
communities?
Yeah, so that will come up in our idle discussion.
Okay.
And we don't know. We believe it is the new market tax credits a map, and because I've seen a couple different references to that, but nobody knows for certain yet. We're waiting for the rules on that. So that's
Okay.
all I can say.
I'm realizing that a lot of these are about idle, so let me just wait until you get through the idle section.
Okay. Yeah, just
Okay,
interrupt me if you have something that I need to answer right away.
perfect. Thanks.
All right. The interim final rules say that the portal will open shortly thereafter, after basically today, after we had these first few days specifically for these lenders. I don't know if that means later today or it means sometime next week. I'm betting that it's sometime next week, but it might happen earlier. The important thing for you to do is to contact the lender that you're going to be utilizing. Make certain that their application portal is open, or that they know you're interested and will contact you when it is, so that you can get an application in as quickly as possible. Again, the Fed seems to think they've got plenty of money. I wouldn't count on that. And this total program is open through March 31st. So that's how long, presuming there is money that lasts, how long you have to apply. For applying for second draw loans up to 150,000, you want to work with your first lender. In fact, you might be required. It's uncertain at this point, but just plan to work with them. And the reason is, especially for loans under 150,000, is that they're presuming you're going to use all the same numbers, and so they're not actually they shouldn't require you to submit any financials at the application for the second round, which is a huge benefit. However, you will have to show proof of revenue reduction, meaning you had that 25% reduction in revenue 2019 over 2020 with your forgiveness application if you apply for forgiveness. So you don't want to try and game the system. You will have to provide proof in the end. But that ability to apply without having to put together a new package of financials is really beneficial. So now let's talk about the EIDL Advance. EIDL stands for Economic Injury Disaster Loan. And for those of you who remember, the first time around, the with the CARES Act, there was this $10,000 advance. The SBA came out with their rules, and the way they distributed funds is they said we would give $1,000 per employee up to a maximum of $10,000. Now, some people were upset about that because they thought they were going to get the full 10,000. So I'm gonna say some things that not everybody's going to agree with, but I want to give you my thoughts on this. So if a business makes, say, $12,000 in 2019, and then they saw a reduction of some in 2020, does a business with $12,000 in revenue, does it warrant giving them a $10,000 grant? Maybe. But what if it's $5,000? What if that was their revenue in 2019? Or let's say $500? Because there are lots of businesses out there that are side gigs, that are legitimate, that only make, a few $100s a year. Does it make sense is it in the public good to provide $10,000 in grant to all of those businesses? Now, that's the pragmatist in me. The optimist in me would say, think of how much wonderful new entrepreneurial effort can be put on top of the $10,000 grants going to small business owners. So that's wonderful. But that is the type of thinking that led to the changes. However, Congress has come out and said the full $10,000 is going to be available to businesses that meet certain criteria. The first thing, they can't have no more than 300 employees. Well, nobody's going to have a problem with that. I apologize. Are you guys seeing some type of writing on the side of I have no idea where that came from. Sorry about that. I'm just leaving it. So, and this is where the question comes in. For eligibility, a business has to be in a low income neighborhood. As I said, we think this is going to be tied to the federal new markets tax credit map, but I also think it'd be wise to wait for instructions because I don't want people to get their hopes up and then have them dashed. But I took a look at the map, and it appears that about half of Eugene, most of Springfield, all of Florence, Mapleton, Veneta, Junction City, Oak Ridge, West Fir, and I don't know, a third of Cottage Grove would qualify based on the map as I saw it. Now, in communities like Eugene, it's sort of split up, it's broken up. For the rest of them, it just covers the whole area. Unfortunately, the McKenzie is for some reason not on the map at all. Cottage Grove is not included, but Coburg is not included. So that's what I looked at. But again, I wouldn't plan on utilizing those funds until we get the final instructions. Now, and here's another eligibility piece. You have to be able to show a 30% revenue reduction, 2019 over 2020, during an 8-week period of your choice between March 2nd and December 23rd or December 31st. So if you can show an 30% reduction in any what's effectively 2-month period, and you are in one of those low-income neighborhoods, you should qualify for this. Businesses who would have qualified, so businesses who have already received an EIDL for less than $10,000 can reapply to receive the balance. This is huge. So if you got $1,000, $2,000, but you now know that you should have qualified for the full 10 because you meet the criteria, you can now reapply. And the new portal is supposed to be available on January 17th, which is this Sunday. I hope that they come out with some instructions and information before they just open up the portal. But I can't promise that that's how it's going to work. So for those of you who are interested in this and think you might qualify, you're going to want to watch the news or even go to sba.gov and monitor their EIDL application portal, because as soon as it's open, you're going to want to get there. It's going to be a mad rush. If it ends up working out as it's stated, there's going to be a lot of people looking to get what is free money. So you're going to have to work fast.
And Robert,
Are there any other
one quick
questions on that?
question. Yes,
Yeah.
one quick question. This is a second EIDL in advance that's different from the initial one. Is that correct?
So no, it is a recharacterization of the first EIDL advance. So basically, they are amending the first EIDL advance, Raj, and they're saying that for these targeted populations, we actually wanted you to get the full $10,000. So if you qualify, you can get the rest of whatever whatever you didn't get the first time around. Or if you didn't apply at all, you can apply now and get the full 10,000.
Gotcha. So just to clarify, if a business has received the full 10,000, they wouldn't be eligible for an additional 10,000.
Correct. Sorry, it is a $10,000 cap. So if a business did receive the full 10, you're done. You've got the maximum. Thank you for that clarification.
Thanks.
Okay. So before I move on, there's a great question that just showed up that I just noticed that's how does a forgivable loan work? How is it different from a grant? Karen, thank you for that question. So the PPP is a potentially forgivable loan. And the way it works is you actually accept it as a loan, and loan is a 1% loan with a 5-year maturity. The expectation is that you're going to get some or all of that forgiven. So you will apply at the end of that covered period from 8 to 24 weeks. You will apply with your bank. There's a separate application for forgiveness. You'll apply for that forgiveness and you will receive some portion of it. That amount that is forgiven is effectively a grant. It's just, it has become free money for you. Whatever remains, if there is an amount that remains, continues as a loan under those initial terms of 1% over 5 years. A grant, the EIDL advance is effectively a grant. They've called it an advance on the EIDL loan, but it's not. It was written into the law that it would not have to be repaid under any circumstances. So it's just a grant, and they've confused it by calling it the EIDL advance, but it is a grant. All right. Before we move on, Ariel, any other questions that you really want me to be answering right now?
I think
Nope.
Ariel
Okay.
might be out, but there's a couple people that wanted some clarification on the EIDL grant versus the EIDL loan. One of the questions I saw that seemed relevant was, do you need to have 10 employees to get the full 10,000? And yeah, let's start with that one.
Yeah. So if you are in with the EIDL advance, if you qualify under the terms that I just mentioned, you don't have to have the employee count. That's what they're doing, is they're saying you qualify for the $10,000 if you meet these qualifications. If you don't meet these, if you're not in a low income area or can't show a reduction, then the old rules of EIDL still apply. So you can apply for, if there are any funds left after they do the targeted dispersal, then you can apply for an EIDL grant based on the old rules. So the old rules still apply if you're not a part of this targeted group. The loan, the EIDL loan is actually, the economic injury disaster loan has been up and available to apply for for the last several months, actually ever since this started. It actually never went down, and it is a loan for 30 years, which I find crazy, but it's a 30-year loan at if I remember correctly, it's 3.75%. And if you want to know more about that program hasn't changed since the beginning, so I didn't prepare any specific slides on that. But it is cheap money. It's certainly because it's such a long, a 30-year loan, the impact to your monthly debt service is very little. So it's a good program if you need it. All right. So Let's talk about the employee retention tax credit. Okay, so old versus new. The employer retention tax credit was largely ignored. And I'm not going to go deeply into this because you really need your CPA to do that. It was largely ignored the first time around, primarily because it wasn't hugely beneficial and you couldn't use it if you got a PPP. And for most businesses, the PPP was the better choice. So we didn't talk about it a whole lot last year. But here's how they vary. In last year, the old version, it was $5,000, a potential $5,000 credit per employee for the entire year, or 50% of $10,000 in qualified wages. And that was it, $5,000 per employee as a tax credit. In the new one, it's up to $14,000 per employee here in the first 2 quarters, or 70% of $10,000 in qualified wages. So it's per quarter. So it is significantly, it's just a larger credit, a larger tax credit to take a look at. The revenue reduction qualifier was hard the first time. You must have experienced more than a 50% decline in gross revenue quarter over quarter compared with 2019. And that's a lot. And so that made it hard for some businesses to qualify. Well, they reduced that reduction amount to a 20% decline, making it much easier for businesses to qualify. And it says in comparing quarter over year over year in a given quarter with the same quarter in 2019. That looks like a mistake, but it is actually true. They're still utilizing 2019 as the baseline to compare Q1 of 2021 and Q2 of 2021. So if you see a 20% decline in comparing those 2 years, then you would qualify. And finally, that PPP exclusion, you weren't allowed to take the ERTC last year, but now you can, as long as the tax credits aren't used for the same payroll as your PPP. And frankly, your loan, the PPP loan amount is covers about 11 weeks worth of full payroll. You've got 2 months of potential tax credit. That leaves a lot of room to utilize both of these programs. So if you qualify, it's definitely something to get with your CPA about. This is a complicated tax credit, but I'm just sharing enough with you to encourage you to talk to your payroll company or your CPA or your tax preparer to let them know how you can best make use of the ERTC. Quick question. Are they going off gross sales or net profit? These are gross sales, gross revenue. And all these programs are actually utilizing gross sales as as their qualifier. Now, just a very brief mention of the Grants for Shuttered Venue Operators program. So it's a $15 billion program for these types of entities, live venue operators, theaters, live performing arts, museums, cinemas, and then talent representatives. The reason that I brought this up, it is very niche, I understand that, but it's a very beneficial program if you happen to know somebody or an organization that could benefit from it. They do have to show a 25% or greater drop in revenue, 2020 over 2019. I don't think any of those organizations are going to have problems doing that. And the grant amount is the lesser of either $10 million, which I'm sure would be great, or 45% of 2019 gross earned revenue. That's a large number. For some of these organizations that have really suffered over the last year, getting a grant, the equivalent of 45% of their 2019 gross earned revenue, could be hugely beneficial. Unfortunately, we don't have the final rules on this. We're still waiting for them. But once those come out, if you're interested, make certain that you get those rules to potentially interested parties. Make sure they know about it. You cannot get this and the PPP. This would be the better bet if it qualifies, obviously. And again, we're waiting for instructions on that.
Robert, can I ask
So,
you one question?
Yes, sir.
A few folks have asked, generally with the revenue drops, is that based off of total sales, gross sales, or is it based off of net profit or net income?
Yeah, it is gross. In almost all cases for revenue reduction qualifiers, they're talking about revenue, total revenue, gross sales.
Thanks.
You bet. All right. And then my three biggest takeaways, which I already shared, I shared earlier. The second draw of the PPP should be nearly automatic, especially if your loan amount would be under $150,000. So I highly recommend that you go back to your first PPP lender and let them know you're interested and be ready as soon as that portal opens for them. And then for eligible businesses, that $10,000 EIDL advance is simply too good to pass up. So if you think you're in one of those low-income communities and meet the other qualifications, just keep your eyes out for that. And then regarding if you are an employer, you should talk to your CPA about the ERTC, the Employer Retention Tax Credit. It is, again, I think hugely beneficial, and it's going to take some finessing. It's going to take some work to figure out how you can show that you're using PPP dollars for this payroll and you're using tax credit for this. I believe most businesses, unless you've seen a huge reduction in total payroll, most businesses should be able to get benefit from both. So with that, I'm back to my takeaways screen, and I'm available for questions. So let me know what questions have come up. So there are a bunch of them here, and I could go back through the chat, but hopefully Raj or Corey or Ariel can help me out there.
Yeah, Robert, let me fire some off. It sounds like you've answered quite a few already, so forgive me if I read something you've already answered. But how do you go back and get the EIDL forgiven if you already have been forgiven? Is it automatic?
No, that you will have to reapply. Unfortunately, we don't know exactly what that looks like. When the new EIDL portal opens up, ostensibly on Sunday, hopefully that will be clearer. All I know is that they were very explicit that you can go back and reapply to get the remainder. My guess that application portal for the EIDL, for anybody who went through it, it was fairly simple. It's just a series of 5 web pages that you click through and put your information in. My guess is you're just going to have to do the same thing. Yeah, that's my guess, but again, I don't know. There might be a separate application for those who are trying to get the remainder of their 10,000.
Okay, great, thanks. If you have not applied for loan forgiveness for the first round of PPP, should you still go ahead and apply for second round?
So this has been uncertain, even with all of the rules that have been created. It is uncertain if you're applying for your first round of PPP, if you are required to utilize all of the most of the first round rules. But either way, the PPP is beneficial, and they did make changes to it to make it more beneficial. So you know that you're not going to have to pay taxes on any forgiven amounts. You know that your EIDL advance won't be reduced from your forgiven amount. They've made some really good changes to it. So I recommend that you at least consider it. Talk to a banker, talk to your CPA accountant if you've got one, and figure out what it could look like for you. At the worst, you've got a 1% loan you have to repay over 5 years. That can be hard on cash flow, but it's for most businesses, it's definitely worth applying.
Great. I think you already answered this, but if you already applied for the EIDL Advance last time, do you need to reapply or will it automatically processed? You
Yeah,
have to.
yeah, I think you do have to reapply. I don't know exactly what the application looks like.
Okay. If we were a startup that started last year, do we qualify to hire new people?
No, most of the programs, so these are all disaster recovery programs. So they are designed to help businesses stay whole as they were prior to the disaster. So in most cases, you have to have been in business prior to February 15th. That's the date that's normally used of 2020. So if you started after that, it's unlikely that these programs are going to work for you. If you were in business, say in January of 2020, there are some of the programs might be available to you, but I'd reach out to me or somebody else who can help you through that process. Honestly, there's not a lot to businesses that don't have at least a quarter's worth of business in 2020 to be able to access.
Okay. This one I'm not exactly sure, but let's go for it. What if you weren't able to get the PPP the first round, partnerships with the Schedule K weren't able to access the first time?
Yeah, they didn't make changes to that. So chances are, if you did not qualify for PPP the first time, they made very few changes that would allow for someone who did not qualify the first time to qualify a second time. I do know, surprisingly, that some banks, well, banks all built their own systems based on their interpretations of the rules. You wouldn't think in a program like this that there would be much variability, but there was considerable variability. So it might be worth looking at another lender, perhaps a third-party lender, if you don't want to go to another bank in your community. But it might be worth talking to somebody else if you think you should have qualified, if the rule wasn't explicit, if you don't understand, it might be worth talking to another entity. But by and large, if you didn't qualify the first time, you won't qualify now.
Okay, great. I did not apply for forgiveness within 24 weeks from disbursement. I was at 24.5 weeks and by then the US Bank had turned off their forgiveness portal when figuring out the new rules. Does this mean that I cannot get my first draw forgiven?
No, that should not mean that. There should be quite a much larger window for you to apply for forgiveness. My guess would be that they modified, or they shut down the window because they knew the applications were changing and didn't want anybody to apply with old rules with new rules so close. That would be my guess. You should be able to apply. Frankly, nobody 24 weeks in, nobody should be expected to apply for forgiveness within a week of the end of the window. That's simply too soon. So no, you should absolutely be able to get that application in.
Okay. And is there a list already of lenders? Did people already ask that? There's been a lot of questions to that regard.
Yeah, that's a hard one. There is a list, a list of lenders that the SBA had up as of Friday, and then they took it down because I don't think their own list was updated. The best thing to do is, this is my recommendation. Go to your current financial institution and just ask them, are you participating? Can you help me with this? If they are, fantastic, use them. If they're not, you've got two choices. You can look around for another local lender who might be taking on new clients for this purpose. Frankly, there were very few of them the first time around. And it was sort of a point of frustration because I want you all to use your local banks and credit unions. However, that said, for people who are struggling to find somebody, find a bank, I'd just go to a third-party lender. There are a bunch of them out there, nav.com, lendio.com, PayPal is a PPP lender. I would go to an organization like that if you're having trouble finding a local lender that can support you. And honestly, those third-party lenders did a pretty darn good job of getting applications in and through in a timely manner. So I hate to say that because I really want people to work with local lenders, but in this case, some of those online lenders were very well equipped for this program.
Interesting, thank you. Does the first PPP loan count or get excluded in the income comparison?
Good question. No, the PPP amount does not get included as revenue. Yeah, it does not. It is excluded from your revenue calculation.
Okay, thank you. Question here, we are eligible to apply for the Shuttered Venue Grant, SOS, but not until the later rounds, and no one is sure how far the money will go. We can't get both PPP and SOS grant. Can we apply for PPP and return it if we get the SOS?
Yes, you can. And you have a little bit of, I shouldn't say that. Yes, you can return the PPP and you know, with really, you can return the PPP if you don't use it. No, I need to back up. If they won't allow you to do both, we don't know, because we don't know how you're going to apply for the Shutter Grant program. We don't know how they're going to check whether you are actively pursuing a PPP. So what I would do is put in an express interest with a bank, with an entity. And honestly, I think I would wait. I know that's scary, but I'd wait until you knew what the rules were, because what the SBA is going to be running the shuttered venue program as well. So they could very easily do a check to find out whether you've applied for PPP. And what I wouldn't want to have happen is you apply for a PPP that you expect to pay back or just not accept. But because you put in the application, the SBA says, no, you're applying for PPP funds. We're not going to allow you to apply for this. I wouldn't think that would happen, but it could. So until we actually get the rules on how they're going to be processing the venue grants, I'd be really careful about that. I wanted to say something different, but thinking about it, I do think I'd be really careful about that.
Okay, thanks. Does anyone know if non-citizens can apply?
Yes, somebody knows, but I don't. I know there's a couple people that some ringers that I asked to come here. If Eric Lind, who's on our capital access team, he's here. Eric, if you know the answer to that, please unmute and tell me. I do not know the answer to that. The first time around, they were not. I did not. The new act is 5,593 pages long. So there are some of those pages that I didn't get to. So there may be some things in here that I don't know the answer to, and that's certainly one of them.
Okay. How about the current shutdown since November 2020? Will that affect any of the applications?
So the current shutdown could impact application for example, actually one of the things that's in the employee retention tax credit that I didn't mention, there are two different ways you can qualify for that as an employee. One is what's listed here. You saw the 20% reduction quarter over quarter. Another is if that you were required legally to shut down by your state. So if you were in that situation, if you are in that situation now, like a gym, businesses that have to shut down, you automatically qualify for the employee retention tax credit. You don't have to show the 20% reduction. So yes, it can impact you. Frankly, if you're shut down, you're going to be able to show that reduction anyway. But yeah, you would get an automatic qualification for that program.
Great. When comparing quarter over quarter income, is the PPP forgiven loan included in income? I think that was already asked.
Yeah, no, it is not.
Okay.
It is not.
Are donations included in revenue, or is it just earned revenue?
So I'm going from memory here. So so for nonprofits, I believe it says earned revenue for nonprofits. That's what I'm remembering. But I don't know the answer to that. I wouldn't stick to that answer. I do a little bit more research, but I believe it's earned revenue.
Okay. Is PPP available for sole proprietorships with no employees? My wife and I run a photo booth business that experienced 90% revenue loss in 2020. If understood correctly, EIDL would only grant my wife and I $2,000.
Okay, so there's a couple different questions in there regarding the PPP. Yes, you qualify, and to determine how much potential PPP loan you could get as a sole proprietor, you would take your Schedule C from 2019, look at the bottom line of that, which is your net income. That is essentially your annual income total. You divide that by 12 to get a monthly average, multiply that by 2.5, and that's the amount of loan you could potentially get. So, and yes, you would qualify for the PPP. For the EIDL, if you are not in this low income community that we talked about, and then you would be limited to $2,000 as we understand it now. If you are in a low income community, you could theoretically get up to 10,000 or get that $10,000 in EIDL grant.
Okay, great. So we're getting close to the top of the hour, and there's just a few more questions left, which I think we can blow through. We're going to continue on and answer these, but I also wanted to just say briefly that we will make sure to print out these questions and have Robert answer those that didn't get answered and make sure to get back.